Welcome back. Hope you're having a good morning. Well, we just told you about the entire trade setup as well as how the global cues are stacking up. But our research team is joining in to run us through CNBC-TV18's top stocks for the day. Well, Sonia, you go first. TVS Motors, how are the numbers?
Well, it was a good set of earnings in line with street estimates. So I'm going with green over there. It was a solid revenue growth of almost 15% that TVS reported this time. It's the fifth consecutive quarter of 10% plus margins, and that's something that the street will definitely like. TVS was struggling to get to 10% for many years, and now 5 consecutive quarters of 10%, profit growth of 22%, and the management commentary is what the street would like the most. Very positive. They are guiding for volumes of 100,000 units for FY23. Now, this implies they would do 50,000 units in Q4 versus about 29,000 that they did in Q3, and aggressive expansion plans in the electric vehicle space with the TVS iQ, which is the highest selling electric vehicle in the two-wheeler space. Now, brokerages, it's a mixed bag, really. So here is the list. Citi CLSA have a sell. They have target prices that are below 1,000. Morgan Stanley and Jefferies have buy in equal weights with target prices anywhere between 1,100 to 1,550. So it's split opinion, but the numbers are decent. No two ways about that, and going with green.
All right, Sonia, thanks very much for that. Well, Pidilite is the next one we're going to talk about. Mangalam is standing by with more on numbers. Mangalam, hi, morning.
Good morning. So weak numbers coming in from Pidilite. In fact, the revenue is just under 3,000 crores. The street was working with a number upwards of 3,150 odd crores. The EBITDA, as a result of which, fell below 500 crores as well. We were working with a number of 580 crores. The margins much below street expectations. At the same time, the net profit too has missed estimates. The company's reported consumer and bazaar volume growth of just about 1%. Most of the street were working with a number of anywhere between 3 to 4 odd percent. Gross margins, while they've improved a minor bit sequentially, about 80 basis points, they still remain under pressure. The company cites this weakness to increased inventory ahead of price hikes at the same time last year. So as a result of which, the base was extremely unfavorable. They've said that gross margins have improved just marginally because of the high-cost inventory that they were sitting on, and demand conditions in rural and semi-urban still remain weak. However, they're optimistic about the future, but until that happens, expect the investors and the stock to remain in a bit of a sticky situation.
Okay, all right. Thanks a lot, Mangalam, for that. Let's go across to Reema now. She's tracking Indus Towers this morning. Reema, over to you.
Thanks so much for that. So Indus Towers has reported a weak quarter. It's reported a loss for the first time ever of 708 crores, and this is on the back of the company making a doubtful debt provision, sort of like a write-off of nearly 2,300 crore against receivables from one of the telcos, which should be read as Vodafone Idea. The company indicated that Vodafone Idea was making part payments of its outstanding receivables till December. They had committed to making full payments from January of 2023, but now Vodafone Idea is finding it difficult to make those higher payments. So as a part of prudent accounting, they've decided to write off or make that doubtful debt provision. Now, as a result of which, you've seen the margins collapse. Now, this is the third consecutive quarter that the company is making this doubtful debt provision. This quarter, it's a big amount of 2,300 crore that's driving the margins down to 17.5%. And the company consequently has reported its maiden loss of 700 crore plus. Back to you.
Okay, all right, Reema, thanks a lot for that. Well, let's go across to Ekta. She's joining us to tell us about Sun Pharma. Ekta?
Thanks for that. Well, yes, Sun Pharma is in focus because Taro released their numbers. So it is a recovery that we've seen Q on Q. Net sales have come in at 139 million versus 130.5 million Q on Q. Operating income has come in at a profit of 1.3 million, which compares to a loss of 6.8 million last quarter. So that is a margin of 1%. Hence, that is positive. Net income at 7.3 million, which compares to a loss of 2.8 million in the previous quarter. Year on year, however, the numbers are still weak, but to put it into perspective, margins at 1% versus 27% last year. Net income is down 70% on a year-on-year basis. They continue to experience price erosion in the US markets, which has impacted the overall performance. Cash on books remains high. Stock was up around 2% in US trade, and the overall contribution to Sun has also reduced. So that's the reason why we could probably see Sun in the green today, despite the weakness on a year-on-year basis for the Taro numbers.
Okay, going to be a sunny day then, perhaps. I just had to say that. cliches all across. Well, Surbhi is with us. She's going to tell us about United Spirits and how the numbers look. Surbhi, over to you.
Hi, thanks for that. So United Spirits declared their numbers yesterday and they don't look so good. Even when you adjust for the slump sale of the popular brands last year, the revenue growth is 10% on a year-on-year basis at 2781 crores. But it's the gross margins which are under pressure. The gross margins are impacted by the input cost inflation and is down 400 basis points on a year-on-year basis. This has trickled down to the EBITDA as well, which is down 12.4% and the margins are down 340 basis points. The company has also spent 150 crores on supply agility program, which affects their profitability. When you exclude that, their PBT is down 3% at 303 crores. Both the segments, Prestige and Popular, have seen a volume growth of 3% odd. The realizations of the premium segment is up 8% on a year-on-year basis, which has driven the revenue growth, and the Popular segment realizations is down 1% on a year-on-year basis. The company has sold its stake in its wholly owned subsidiary, Sovereign Distilleries, for 32 crores. The management has commented that they expect the inflationary headwinds to continue for the shorter term, and that is why the stock could be under pressure today.
Okay, thanks a lot for that, Surbhi. Well, Sonal joins us as well to tell us about a whole host of stocks that she's tracking. Sonal, morning.
Good morning, Nigel. Let me start with macrotech developers. We already knew the Q3 operational update, which was strong. Now the PNL is out. Of course, for real estate companies, it's lumpy accounting. So still looking at those numbers, margins have declined 200 basis points, while profits are up 6% on a YY basis at 300 crore rupees. But if we look at the guidance of the company, where the company had guided for 11,500 crore rupees in terms of sales this year, they say they are likely to exceed it. They are tracking the cash flow guidance of 6,000 crore rupees for FY23. However, now they say they'll be able to reduce debt only to 7,000 crore rupees versus 6,000 crore rupees that they had guided for earlier. In terms of launches, they have 14 launches planned in Q4 with an estimated gross development value of around 5,760 crore rupees. Moving on to some chemical names, Tattvachintan Pharma, where it was a YOY decline, but quarter-on-quarter recovery for the company. Revenues were up 15%, EBITDA down 25%, margins were down 800 basis points, leading to a profit decline of 49%. So one of their highest margin products, which is structured directing agents, that is where some demand was delayed because of the Chinese shutdowns that we have been seeing. They say full recovery in SDA is expected only by second half of FY24, on the back of which I'm expecting the stock to be in the red. Lakshmi Organic, again, a quarter-on-quarter increase because Q2 was really weak for the company, but YOY decline continues. Revenue down 24%, EBITDA down 48%, profits also down 62%, but quarter-on-quarter, of course, it's an increase for the company.
All right, Sonal, thanks very much for that. Well, Nazara Tech, Home First Finance are the next two companies on our radar. Rima is standing by with details. Rima, hi.
Hi, so it's a good quarter for Nazara Tech. The company has reported a top-line growth of 70%. Margins have come under a bit of a pressure, but remember, this is a company with a low profitability, so margins do tend to swing around along with the bottom line. So margins have come in at just sub 10%, but aided by other income, a higher other income, the profit growth is solid at 75%. Home First has also reported good numbers, and NII and profit growth of about 27-29%. NPA ratios have declined on a sequential basis. The customer acquisition is strong. Back to you.
Okay, thanks a lot for that. It may be too much for you folks to digest so many numbers, so let's do a quick recap. Positive stocks, or stocks with positive news flow. There's TVS, there's Sun Pharma, Lakshmi Organics, Nazara Technology and Home First Finance, Pidilite Industries, Indus Tower, United Spirits, Macrotech Developers and Tattvachintan Pharma could be in the red this morning. So lots of red stocks perhaps on the back of numbers being lower than expected. Pidilite Industries could top the charts considering there's been weakness in the FMCG space. But let's do one thing. Let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, hi, morning.
Hi, morning, and thank you for that. Well, I'll start with the crude oil prices, where after 2 weeks and 15% of gains, we finally have seen some profit taking, 2% of decline in the overnight market. This is after the U.S. manufacturing has contracted for a 7th straight month, and the U.S. inventories show a 5th weekly build-up. The markets have been taking very positive stance from the China reopening, but at this point in time, that really seems to be bothering because on-ground actual demand is yet to come in. Also, take a look at the metal prices, and we have seen strong gains continue into this one. Copper prices continue to hold at a 7-month highs. Aluminum prices trading at a 7-month highs as well. And you have gold prices now trading at a 9-month highs in the international markets. The Indian markets continue to trade near all-time highs yet again.
Okay, Manisha, thank you very much for that. More on commodities in a bit from now. We'll take a very quick break here. We are back, and we'll have Deven Choksi of KR Choksi joining in for some fundamental stock talk. We'll also have the management at UCO Bank to discuss their third quarter numbers in a bit from now. Stay with us.